Good afternoon, everybody. My name is Dustin Angelo. I'm the president and CEO of Anaconda Mining. We're a growing gold producer in Atlantic Canada, a top-tier mining jurisdiction. We have two core project areas that we work in, up in the Baver Peninsula, where we have a project called the Point Rousse project that we've been in production, producing gold for the last 9 years. And we also have an exploration property called Tilt Cove that's about 30 kilometers east of Point Rousse. In Nova Scotia, we have a project called Goldboro. We are in Guysborough County near Cape Breton, and we're in development on that project right now, looking to be in production by about 2021. We've got a strong balance sheet, a significant amount of cash, very little debt, and we continue to generate free cash flow at our Point Rousse project. We're established. We have an established growth platform. We're looking to get to about 100,000 ounces a year in the next 3 to 5 years. So we have an experienced team to execute on our growth plans. The management team has got a significant amount of experience in Atlantic Canada. We've worked on many different projects in the region. We also know the geology really well. We know the government folks really well, have good government relations, can attract talent, and know the vendors. We get tremendous support, capital markets, and technical support from our board and advisory committee. Corporate structure, we trade on the TSX and on the OTCQX. Shares outstanding about 118 million, about $30 million market cap in Canadian dollars, $6.4 million in cash as of the end of the year, and very little debt, mostly government loans and capital leases. Shareholder base, mostly retail, but we're growing our institutional side, about 16% right now, and about another 8% from management and the board, and we're covered right now by M Partners and Red Cloud. So just to dive into our two main assets, the Point Rousse project on the Baver Peninsula, we own that 100%. We've been in production, as I said, for about the last 9 years. Had record production, a little over 20,000 ounces in 2018, looking at similar levels for 2019. Very good cash flow generator. For the first 9 months of 2018, we produced $6.7 million in free cash flow. It's not a camp. There's significant infrastructure here. People live close to the mine. We've got a 1,400 ton per day mill. We've got tailings capacity for about the next 15 years based on our current throughput. And we have an operating port, which we opened up a couple years ago when we started selling some of our mine waste as a construction aggregate product. We've got 3 deposits, and in the area there's other areas where we can add mine life and bring it back to the Pine Cove mill. As I mentioned before, we have the Tilt Cove property. It's a high-grade area. It's called the Nugget Pond Horizon, about 30 kilometers from the Point Rousse project. It's where the old Nugget Pond mine was, producing about 11 grams per ton. So we're looking for another Nugget Pond over there, and if we can find that type of grade, we can certainly truck it back to the Point Rousse project and put it through the mill. The Goldboro project is the other significant project we have. We own 100% of that as well. We've made significant progress on it in the last year and a half since we acquired the project in May of 2017. We've acquired it for about $15 an ounce when there was about 870,000 ounces on it. We've registered the project for environmental permitting in August. We put out an updated mineral resource on the project in October. Now it's at 1,056,000 ounces. We also updated our PEA for better after-tax economics. We've drilled about 22,000 meters on it so far in the last year and a half. And we've commenced a feasibility study and are in the process of doing a 10,000 ton bulk sample. Ultimately, what we're looking to do with Goldboro is, for 2019, is essentially get it shovel ready for construction in 2020. Just a quick snapshot of our mineral resources, about 1,250,000 ounces between Goldboro and Point Rousse. We're currently producing from the Point Rousse area, and then we'll move into Goldboro in 2021. With the potential around Point Rousse, we see the ability to continue to extend the life there and basically add production on top of what we're going to be doing at Goldboro. And Goldboro actually goes to 2028, so we've got a pretty long life of mine when you look at it from the company perspective. So just to dig into Goldboro a little bit more, since it's a signature asset that we have, and there's very limited time here, we're located near the on the eastern end of Nova Scotia, near Cape Breton. There's a picture there of the aerial view of the property. Essentially, at this point, we're following parallel paths. We're developing the project and also expanding the mineral resource to do a lot of exploration. From a development standpoint, back in January 2018, we did a PEA and came out with some pretty good economics. Almost a 9-year mine life, over 40,000 ounces per year. It's an open pit to underground, so underground grades around 7 grams per ton. Very good economics, unit costs, $525 US per ounce for operating, $640 all-in sustaining cash cost per unit. Very good NPV, and this PEA was done at $1,160 US dollar gold, so it gets even better in today's environment where we're trading roughly around $1,275. So you can see on the bottom line of the table here, the valuation goes up significantly. Essentially, about a 15% increase in gold price in US dollars leads to about a 35% increase in NPV. We're continuing to develop. This is the development milestones in the near term. We're essentially for 2019 looking to do permitting and get all of our permits and then complete a feasibility study. We are de-risking this project as we move forward. We don't see any need to dilute our shareholders to advance our project in 2019. We have cash and we have cash flow to support our 2019 goals. When you look at it from an exploration perspective, it's got a lot of potential. What you see here is on the left, that figure is a plan view. It's about a 1.7 kilometer strike length for the deposit, and then the cross section on the right is a pretty typical cross section for what you see from Maguma style mineralization here. It's high grade quartz veins and mineralized wall rock. We've got 33 stacked folded structures here, folded mineralized zones. As I said, 1.7 kilometers of strike length. It goes about 550 meters in depth right now. It's open in all directions, and we continue to expand the deposit. The best view to look at here to kind of get a sense of the growth potential is this long section. So in that sort of beige color, that was the original resource area, mineral resource that we acquired, the 870,000 ounces. In our first 12,000 meters of drilling, we expanded the deposit in those areas that are in red, and that was a significant increase to the amount of ounces, about 180,000 ounces. We increased to 1,056,000. Grade went up substantially, particularly on the inferred, and then the categorization, the confidence in the mineral resource itself went up. We got over 600,000 ounces now in M&I. And then the blue area that you see there, that's where all the potential is. And we've actually already started drilling some of that and had some results come out between November and January on the area, the Boston-Richardson, where you can see just to the left of the red where it says open. We've drilled all the way down and proven that the mineralization extends down to about 525 meters. And then the West Goldbrook area as well. We've drilled in that area just under where it says open, and we're down at about 450 meters now. All the same sort of characteristics of the deposit, very good grades, typical widths of what we've known already. So we're pretty confident that we'll be able to expand this deposit, and we're looking to go much further and grow much larger than just 1,056,000 ounces. So when you put all this together, when you look at Anaconda, I know this is a quick review of it, but we've got established infrastructure. We've got a very good management team. We're generating cash flow. We've been pretty consistently generating cash flow for a while. We've got a significant growth project in Goldboro that's marching us towards the ability to get to up to 100,000 ounces a year in the next 3 to 5 years. They're all pretty good catalysts to improve our valuation. In this comp set here, we're at the lower end of the range, but on average, it's about $41 an ounce when you look at EV per ounce, and we're about $10 an ounce. So, if we can at least achieve the average, you're talking about a 4 times increase in your valuation just on that alone. I think there's a lot of catalysts in place in order to do that. So some of the key investment takeaways, first and foremost, we are generating cash flow. We are a gold producer. We have all the infrastructure in place. We're going to do another 20,000 ounces this year in 2019. on similar economics. We've got a near-term growth catalyst with Goldboro, particularly with the development of the development milestones, and then as well as the exploration that's coming. We'll have some more results out on the 10,000 meters. We got another set to put out, and then we're also embarking on another 5,000 meters starting in February. And then just a strong valuation upside. I think the valuation, we're trading at roughly 25, 26 cents right now. It's a good entry point for any investor. I think there's a significant amount of upside versus downside in the stock. And you're getting production, you're getting a growth project, established management, and a low-risk mining jurisdiction. So if anybody's got any questions, happy to answer them now, or if not, we're in booth 610, and we'll be there today and tomorrow, and happy to answer questions then. Thank you.